Financial Markets Daily. Blog, April 15th, 2025. Market recap. Global markets are showing cautious optimism today, with European stocks trading higher, led by the auto sector, as investors hope for relief from President Trump's tariff regime. U.S. stocks are up modestly, bonds and the dollar are steady, and volatility has eased after last week's extreme swings. Asia-Pacific markets also posted gains, buoyed by Wall Street's positive momentum and a tech sector rally. Key drivers. Tariff uncertainty. The Trump administration's shifting stance on tariffs, especially exemptions for tech and autos, has sparked a tentative risk-on mood, but escalating U.S.-China trade tensions, with China imposing 125% retaliatory tariffs, continue to fuel recession fears. Central Bank Watch. Investors are closely watching for U.S. Producer Price Index, PPI data, UK jobs figures, and tomorrow's speech by Fed Chair Jerome Powell, all of which could influence market direction. Earnings season. Strong results from Johnson & Johnson and Bank of America have provided some support, but sector-specific risks remain, especially for pharma and China-exposed companies. Currency and commodities. The pound and Australian dollar are gaining on a weaker US dollar as markets anticipate potential Fed rate cuts. Gold and the Japanese yen remain in demand as safe haven assets amid ongoing uncertainty. Oil prices are mixed, reflecting conflicting signals on global demand. What to watch today? U.S. PPI data could impact inflation expectations and Fed policy outlook. UK jobs report may influence Bank of England rate cut expectations, with markets already pricing in up to 4 cuts this year. Fed Chair Powell's speech tomorrow. Any hints on rate policy could move global markets. Investor actions for today. Stay nimble. Volatility remains high. Consider keeping some cash on hand to take advantage of sharp market moves. Defensive positioning. The FTSE 100 is favored for its defensive qualities in stagflationary conditions, while the FTSE 250 and UK IPO market remain under pressure. Safe havens. Maintain or add to positions in gold and the yen as hedges against further trade shocks. Monitor sector risks. Be cautious with pharma and China-exposed stocks due to tariff threats and regulatory uncertainty. Currency opportunities. GBP USD and AUD USD may benefit from continued USD weakness if Fed dovishness persists. Bottom line, markets are balancing optimism from tariff exemptions with fears of a deepening trade war and global recession. Stay alert for economic data and central bank signals, and consider a defensive, diversified approach while volatility and policy uncertainty remain elevated.